High probability breakers. Part 2. A high probability breaker will have two stages of liquidity. Stage 1 is lower time frame liquidity. This is the inducement stage, which is falling just short of stage 2, which can be higher time frame liquidity, session liquidity, relative equal highs, or relative equal lows. This will make a bit more sense once we get to the examples in the charts later in this video. And when I refer to the higher time frame liquidity, I typically look for liquidity pools on the hourly chart or higher. And when I refer to the lower time frame liquidity, I am referring to the 1 minute time frame, because this is where I execute my trades. So let's assume this is a 1 minute chart, and we see that stage 1 is falling just short of our stage 2 liquidity pool. Before our entry, we want to see both stages swept, knocking out early longs and trapping shorts, playing a breakout trade. All we are waiting for now is a closure above our high probability breaker block, which is here. We can utilize this breaker as an entry method, feeling confident that our buy side target will be met. So let's take a look at some examples. If we are looking at this 1 minute chart on NASDAQ, let's see how we can identify our breaker as high probability. As you can see here, we have stage 1 liquidity falling just short of stage 2 liquidity. So this 1 minute swing low is falling just short of a session low, which in this case is the AM session low. So stage 1 is inducing or enticing early longs to get involved. Right here on this move down, it's taking out stage 1 and stage 2 liquidity. So early longs are stopped out, and shorts trying to play a breakout trade targeting lower prices are getting trapped below stage 1 and stage 2 liquidity. After both sides of the market are stopped out, we're waiting for a closure above our high probability breaker. And where is this high probability breaker? Well, we have our low, our high, and our lower low. So we're using the highest up close candle as our entry method. And in this case, just for our anchoring, we have 4 consecutive up close candles here. So the totality of this would be our bullish breaker. As you can see with this candle's close, we close just above the body of our high probability bullish breaker. On the next candle, we open, wick down into it, and expand to our buy side liquidity target. Going to our next example, we're going to remain on NASDAQ's 1 minute time frame. And as you can see here, for this fractal of price, we're chopping around in a range. The market is in consolidation. We have stage 1 liquidity up here, which is our inducement. Now, why is this inducement? It's falling just short of these highs over here. So we're seeing relative equal highs being built as the market is in consolidation. But what do we see on the other side of the range? We see lunch low, so a session low, and another low falling just short of it. So we're seeing highs and lows built. All we are waiting for in situations like this is a purge of one side, and then see if we get a high probability PD array to target short. And in this case, this is how you can utilize high probability breakers for these types of scenarios. So on this move up, when we have our high, low, and higher high, while we're going to purge both highs, early shorts are punished and they're knocked out when they thought this was resistance and their stop loss was here. Longs trying to play a breakout trade above both stage 1 and stage 2 liquidity, they're getting trapped above here. The market provides us with an entry utilizing our high probability breaker. Again, it's these 2 consecutive down close candles, and we bleed to lunch's low. Moving to our next example, this is a 1 minute chart on the S&P 500, and we see more of the same concepts showing themselves within the marketplace. We see stage 1 liquidity here on this 1 minute time frame, a low being built here, another equal low that is falling short of this clear stage 2 liquidity pool. So this is convincing people before the move down that this is strong support. So early longs are trying to get involved. Even if they have the final move correct up to this target, they're early and they're going to get punished for that. So when we have these relative equal lows and we're understanding stage 1 and stage 2 liquidity, we want to wait for what? We want to wait for price to run both stages of liquidity, punishing those early longs and trapping shorts below both stages of liquidity. We wait for that closure above our bullish breaker, which is here, low, high, lower low, the final low, high, lower low before this movement lower. These consecutive up close candles, right here, we close above it, come back down into it and expand to the high. Now, what is even better about this setup in terms of just the quality of what we see in price? It's occurring during the 1050 macro. So we're seeing time and price align. And on top of this, recall from part 1 of the high probability breaker series, we're seeing an SMT. So ES here is making a lower low, while NASDAQ was making a higher low. So we're seeing even stronger confluence in why this should be a high probability breaker. We just have to wait for the candle to close above, get long, and deliver us to our buy side liquidity target. So thank you guys for tuning into another video. As always, I hope this video helped reinforce your learning and knowledge about breakers and how you can utilize them in your trading. As always, if you guys have any comments, be sure to leave them below the video, and I will talk with everybody soon.